Guys, before I start this class, I want to tell you something. This class is so very important. You watch it for 10 times, it doesn't matter. But I want you to understand this class. All right? And that is what is debit and what is credit. See, debit and credit in accounting, if you decide to be an accountant, debit and credit should become the initials of your name. What I mean to say is, if someone asks, what is your initial? Do you have to think twice for it? No, right? If you decide to be an accountant, the debit and credit should become like that. Without knowing debit and credit, you cannot do anything in accounting. Maybe I'm overreacting. If you think I'm sorry about that, but the truth be told, I'm being very honest. If you don't know debit and credit in accounting, if you don't have a clarity on debit and credit, we cannot go longer in accounting. Now, before we learn what is debit and what is credit, there are some certain rules. There are certain things that we need to forget. We need to unlearn, right? Such as, do not think the way others use these terms, such as your banks. Do not treat debit and credit like how the bank people treat this. Do not think, when I said debit and credit, do not allow your mind to think of your plastic debit cards and credit cards. And please do not think debit is good, credit is bad. Debit is something good, and no, that's not what it is. Do not think debit is plus and credit is minus. If you have any of this in your mind, this is the right time to remove it, because I'm going to tell you what is debit and what is credit. We already saw in our previous class, while we are learning accounting equation, we saw every transaction, every transaction of an accounting as dual impact, right? The debit and credit are nothing. The debit and credit are just the reflection of duality of a transaction. Every transaction has two sides to it, right? See, in the world of finance, money does not come to your account just like that. For the money to come to your account, it should leave another account. That is all the debit and credit. Now, you go to a shop, you buy one pencil, right? For the pencil to come to your house, you have to buy the pencil and bring it with you. For you to buy the pencil, you have to give the money to that guy. Agree? See, there are times, there are more, there are times more entries will be involved, such as I go to buy a pencil and I pay cash. That guy gives me a discount. There are like more than two entries. That's a discount account is involved. That is okay, but compulsorily there should be two account impacting when a transaction happens, because I'm telling it to right. I'm telling to you right. It is a proof, right? See, I bought a pencil. Pencil did not appear from the sky to me. For me to receive the pencil, I gave the money. That is the duality of a transaction, the reflection of duality. I gave and something came to me. That is what debit and credit is. In a transaction, there is a debit, there is a credit, an incoming and outgoing. All right. Now, you may have a question. All right, boss, I understand. A debit and credit is a duality of a transaction, a reflection of a duality in of a transaction. I understand that. I agree that completely with you. Now, how are we going to learn? How are we going to identify what is debit and what is credit? That's a fair question, guys. That's really a fair question. That's the reason we do something called journal entries in accounting. Passing the journal entry. We pass the journal entry the, we pass the journal entry to identify what are my debits and what are my credits. Now, you may ask another question, how am I going to do this? I'm going to teach you how to pass the journal entry. Now, we identify the transaction and then we identify what is debit and what is my credit. That's called passing the journal entry. And I'm going to teach you how we're going to identify and pass the journal entries, right? Okay, guys, we're gonna see how to pass the journal entry. Before we learn how to pass journal entry, we need to know the elements of accounting. There are 6 elements to accounting. One is our drawings or dividends. expenses, asset and liability, equity or capital, revenue or income. The good news is we have only 6 elements. You have to know this at any cost if you have to pass the journal entries accurately. Now quickly let's see what is our drawings. We already learned what is drawings. If the owner of a business needs to pay himself, he will take the money in the name of drawings. And what are dividends? In a joint stock company, the companies which issues shares, right? If you buy a share from a company, how will they pay back to you? Through dividends, correct? And expenses, we all know what is expenses. Expenses is something to run the day-to-day operation. We need expenses. So one thing that you need to know about expenses is it does not have any future economic value. When I say that, you pay a rent expenses, you already stayed there for a month and you're going to pay the rent in the end of the month. Or let's say you buy water and you pay that's your expenses, but you're going to drink the water, right? That will not have any future economic value. And we know what is asset or the resource that has been owned by a company. All right, the controlled or owned by a company is your assets, such as your buildings, machinery, and your assets as future economic value. And liability, we all know what is liability. It's a debt, obligation to pay someone. Equity or capital, this we already studied. It's a capital. And revenue or income, the money that we earn from what we provide from our business. So drawings, dividends, expense, asset, liability, equity or capital, revenue or income is your elements of accounting. Now we need to categorize this. Drawings or dividends, expense, asset will become your debit balance account. Your liability, equity or capital, revenue or income will become your credit balance account. Now if you ask me why is this debit balance, why is this credit balance, I don't have an answer to this. There are questions which you cannot answer. If you ask why salt is saltier, I don't know why it is saltier, but it is saltier, right? For us to do journal entries accurately, this is a rule that we need to follow. But definitely as you progress doing journal entries, keep doing more and more of journal entries, keep involving yourself in the concepts of accounting, you will get a clarity on this debit balance and credit balance of account. For now, this 3 goes to debit balance account, house of debit balance. This 3 goes to house of credit balance account. All right, now there is a short form to behind this, memorize this. That's dealer. Drawings or dividends, expenses, asset, liability, equity or capital, your revenue or income. You can remember this by the name called dealer. Now one more very important thing, this is a rule, guys. If you have to increase any of this account, debit balance account, you have to debit them. If you have to decrease them, you have to credit them. All right, in credit balance account, to increase them you need to credit, to decrease them you have to debit. All right, I know it is confusing. Let's slow this down. Okay, now these are our debit balance account. If there is an increase in this account, let's say I bought a furniture by paying cash. Okay, I bought a furniture by paying cash. Now furniture is increasing in my business, right? I need to increase this. What will I do? Here with this rule, to increase this I will debit it. Now cash is an asset. You tell me cash went outside, that means decrease. I need to decrease this, right? What I will do to decrease, I will credit it. This is the rules, guys. Simple as such. Furniture account debit to your cash account. See, as you progress, you can see purchase account debit to cash account or bank account, however it is, but the ultimately what is getting debited is your furniture account, the purchase account. Same like with liability. Liability is increased. Like I took a loan of 50,000. Loan is what? Loan is my accounts payable, which is directly also it's my liability. To increase, my liability got increased. What will I do? I will credit it. Now to increase this, I will credit it. Cash is my asset. To decrease this, what will I do? sorry, to increase this, what will I do? I will debit it. Now if you see loan, accounts payable account, my cash, it's increased. So cash account debit to my accounts payable account credit. Guys, you need to write it down this somewhere in your study table or in your room and paste it, and you need to memorize this. Now do not worry, let's do some problems, and let's analyze some transactions. We will get a clarity on what we just spoke. All right, now let's analyze this transaction. Now we say David started business with 1 lakh. All right, David is starting a business with 1 lakh. He's putting cash into the business. Now cash is what? Cash is our asset account, right? So cash is coming inside, cash is increasing. Now I need to also tell you guys how to do your journal entry. See, you can date the journal entries. It is good. If you don't date it, that is fine, but if you're going as per the books, if your books is dated, I would request you to put the date. However, your journal entry format should be, now a cash came inside, now cash is increasing, we need to debit this. Always you will start cash account, your cash account debit, how much? 1 lakh. And when you're writing your credit account, I request you to start from here, and I would suggest you to go online and take the format about. You will have dates, particulars, and debit, credit. You can refer to that format to get a clarity on that. Now cash account debit, because debit isn't cash is an asset account, I need to increase it, so I debit it based on this rule. Now capital, looking at this, tell me, what do I do with the capital? Capital is also increasing. If my capital is increased, what I should do, I should credit it. Therefore capital account credit 1 lakh. All right, this will be our journal entry. As I said, this is not in a proper format. Maybe you can refer Google for the journal format. Maybe in the part 2 I will take a note of it and do it in a very proper structured way. Let's analyze bought goods for cash. Bought goods is what? Asset. All right, and goods is coming inside. If goods is increasing, I need to debit data. Now when we are saying bought, that will become our purchase. Therefore purchase account debit will be 5,000. Now purchase account debit, this is DR. Guys, do you even, if you're wondering what is DR, what is CR, is debit received, credit received. That's debit, DR, and your CR. Okay, do not break much your head on that. So bought goods for cash. Now cash is going out. Look at this sheet and tell me cash is a debit balance account. To decrease that, I need to credit it. Therefore cash account credit 5,000. Got it? Sold goods. Now when I say sold goods, it's your sales. When I say sold goods, what is going out? What is going out? Sales is what? Two things. Goods is going out, asset is going out. When I decrease it, I need to credit it. And if you see, sales is a revenue. Sales is increasing. Sold goods, my sale is increasing. Revenue is increasing. If revenue is increasing, you will credit that. When I sell goods, what is coming in? Cash is coming in, right? Therefore, cash account debit. Let's say how much I sold. I don't know. Let's say 10,000, whatever you got it. And you will put a sales account credit of 10,000. When you sell goods, oh sorry, we have it here 50,000. So I've made a note. Say this will be your 50,000. Okay. Now bought machine on discount. Bought machine on discount.